what I mean by this is, let me go down to the 5 minute. For example, let's say, for example, your cycles are 1 o'clock, aren't they, Zeus? I haven't
Yes,
got.
for PM.
Yeah, I haven't got the.
1 to 2:30.
Yeah, 1 to 2:30. Right.
Yeah, and I think before we touch on this, I think what's very important to understand is that when I began sharing about PXH and PXL, I literally said it, but people like that's the thing, Rich. You know how it goes. People hear something flashy and they immediately only can think about that, and they miss the other 90% that was shared.
Yeah, it's.
But you literally said, yeah, the X that stands between previous and low, for example, or previous and high, can be adjusted to whatever time that you choose. It can be an hour, it can be 2 hours, it can be 3 hours, it can be a day, it can be a week, whatever.
Yeah, because this is why it might sound mad, but I literally refer to it as PXX. But I know you can't tell people that because they probably wouldn't have a clue why it's just PXX. But I don't even look at it as PX high, PX low. I just look at it as PXX because for me it's just PXX. Now, what you guys need to understand is, right, Zeus's 90-minute cycles. Look, I started off using these and they are very good, and I did spot something, Zeus's signature move. I spotted it relatively quickly, but just for the simplicity of my model, I don't specifically rely on them too much right now. But if things aren't making sense to me, then I will refer back to them because they are very lucrative. Trust me. If you understand the 90-minute cycles, trust me, that's where Zeus makes all his money. That's where Zeus kills it in the afternoon, right? And the 90-minute cycles do work better for the afternoon. I have to reiterate that. That 2 o'clock time frame. Trust me, this particular move here is an absolute killer, right? Now, what you guys are missing is, right, you've got people saying, oh, well, okay, we'll say candles are ranges. People are saying that, right? But what you don't understand is this. Yes, the 90-minute candles, right, because this is what a lot of you question, and this confused me at first, I'm not going to lie, right? The 90-minute candles, they don't line up, right? Look, the candles are 10:30, 12, 1:30, 3, right? So it's half an hour out, right? Or so. But look, guys, look how simple this is, right? I'm going to do it simply first. This wasn't something that I was going to show you, but I feel like I have to because I feel like Zeus is owed this explanation. Because I think a lot of you miss it completely.
I think people miss it because they don't see the candle.
Yeah. Right, so. Oh, it's all the way up there. Right. Look. All Zeus has done, he's made specific candles in a specific range. In a timed range. Right? Now, inside here, there's still other ranges. There's still 5-minute, 15-minute, 30-minute, 1 hour ranges, right? Obviously, there's not a 90-minute candle, as we would call candle range, because they don't line up. Now, they don't line up for a reason, and you'd be thinking, well, why don't they line up? Well, obviously, somebody somewhere is trying to trick us, right? Or the candles would line up with these cycles. It's that simple, right? It's just trickery, right? So if you look now, we have the candles. It's that simple. That's it. Right? So when people talk about candles or ranges, this is a candle. This is a range. This is a candle. This is also a range. This range to this range is high. Right? Here's
And instead of reversing, it continued.
Yeah.
That's all that can occur. It's either going to form a high, like you mentioned, or it's going to continue.
Yep. That's it. Now, if you were smart enough, right, and you can visualize stuff and you backtest this, you can make a proper candle. Right? In other words, all you do is find the open, you mark out the open, and now you have a wick. You find the close, and you mark out the close, and now you have a wick. So if you wanted to make a candle, this is what the candle would look like. Okay? This would be the body. This would be the top wick, and this would be the bottom wick. That's it. Did this candle close above this candle, yes or no? Yes, it did. So what's it going to do? It's going to go higher. It's that simple. Some people, guys, listen, if you're not looking at price like this, you're not working hard enough. And I don't wish to sound rude, and Zeus, you tell me if I'm wrong, but guys, this is all very basic. Like, you might think it's technical, and yes, to me it is very basic, but the top and bottom of this is, if you've not looked into this, if you've not had time to investigate this, you can't say it doesn't work. You can't say that it's irrelevant. You can't say that candles or ranges are better than time cycles. Okay?
Bro, it's all the same.
Yeah.
But the thing is, what people do is they rebrand stuff. They rename things, and then they try to sound smart and all of that stuff, bro.
Yeah. Now,
And that's the whole issue of social media.
One thing I do want to touch on, Zeus, while I'm here, is because a lot of people have taken what I've said out of way, like, and obviously you've not spoke to me about this because you understand, right? And I don't feel like I have to explain it to you neither. But what I am going to do is explain this to the community, right? A lot of you have seen me say time cycles are useless. I don't need time cycles. Time theory is useless. I don't need time theory. Right. Don't get it twisted, because sometimes when I write stuff in text, it doesn't come across quite perfectly. Some of you may know I'm dyslexic, some of you may not. I don't care, it's not important. But when I say that, some people take it very specific, right? And what I mean by that is, right, like, no disrespect to Day, quarterly theory does not work, right? Zeus, tell me if I'm wrong, but you use the time cycles, right, more of, how would I say, you're looking at time cycles more of a guide or a roadmap to order flow, rather than looking specifically at the AMD type of theory of time cycles. Does that make sense? Am I correct?
Correct.
So don't get it twisted, guys. When I said time theory, quarterly theory, and time cycles are no good, they are not. The logic behind what Zeus is doing here, although he calls them time cycles, right, the logic's slightly different. And yes, they are time cycles because they are a timed cycle. They are a timed period, or, to put it plain and simple, they are a timed range. And this is what you need to understand. These are all timed ranges, right? So I just wanted to clear that up, Zeus, before we went any further, because
that's good,
I noticed that you did have a few comments in your last... there was people saying, yeah, but Rich the Bull said, oh, time cycles are useless. And I thought, oh, wow, like, maybe I didn't explain myself properly, or maybe just people took it literal, but that's what I'm trying to explain, right?
That's the thing. The application of any time theory to the chart is a confirmation of your underlying understanding of where price should reverse.
Yeah.
Because that's the thing. We of course know how to spot reversals way in advance. We literally know next week already where we're gonna see our trades form, but we do not know at what time the market will reach that specific, I'd say POI for us.
Yeah.
So therefore, we don't know if it's going to be during the accumulation phase of our 90-minute cycle, or during the manipulation phase or the distribution phase. Preferably, we want to see it occur during the manipulation phase.
Exactly.
However, the time cycles change, and that's why every single day you see these minor adjustments when it comes to AMD.
Yeah.
Because if you think about it logically, if every single day, yes, between, let's say, 1 to 2:30 p.m., which is the manipulation cycle of the afternoon session, a higher low would form, eventually the masters would realize that.
Exactly.
Then everyone would say, oh, it's this time time of day again, so it's now going to form a swing point.
Yeah. No, it's true, mate. And this is what I'm going to reiterate on now quickly. So, guys, look, Zeus's 90-minute cycles. Look how you visualize a candle. Zeus is doing this in his head. Every time he's looking at a 90-minute cycle, he knows what the candle looks like. He knows that this candle closed above this candle. He knows that he's anticipating higher prices. Right? He knows he got a rejection wick on this cycle. Right? He's visualizing this. Now, guys, if you can't do this visually, you need to train yourself by back testing and applying this logic that I've just showed you, how to make your own candles. You don't really need to make the candles, but I'm just doing it visually so you understand exactly what's going on. Right? Now, the point that I was getting at is this, right? If you have a 90-minute cycle and this one is the actual manipulation phase, right? So I'm not going to mark it up properly. I'm just going to do it rough quick. This is a manipulation cycle of a 90 minutes, right? This is an accumulation cycle, right? This is a distribution cycle. Today, the manipulation... Oh, sorry guys, with it. I'm trying to be quick because I've gone well over time. Right, Luke. Are we alright for time, Zeus? There's no rush, is there?
No. All good,
Give
man.
the people some value. Right, Luke. The manipulation cycle, right, is in the manipulation cycle. This is when we love it. This is when it lines up. Okay. Then you might question, well, the accumulation doesn't, but we don't care because we're always happy to see the manipulation cycle line up, and we're waiting for this distribution, right? Which is perfect. The next day, right, you will find this happen. Right? The manipulation will be in the accumulation cycle. Right? The manipulation just didn't happen. Right? And this is really the distribution, and then the accumulation falls in the distribution. And this happens every other day. Every other day or every 2 days this happens. Then on every third or fourth day it will line up nicely again. Right? This is what I meant by time cycles are useless. Right? When you're looking at it from an AMD perspective, because what I mean by useless is not every single day does the manipulation cycle line up with the exact manipulation in price. If it did, every single day we would come to the charts at 9:15, right? And we would wait for this to happen and we'd all long or short. It doesn't happen like that. That's the realization of it, and that's all I meant. Right, moving on. How can we use this information moving forward? Wow. The 3 candle model, which you can see quite a few people talking about right now. I'd like to say that most understand it, or it was something that I've been using for a very long time. Zeus has also been using it. It wasn't something that I was planning on releasing so soon. But here we are. Guys, look, basically, I'm not kidding, right? As far as ease of trading, this is all you need, right? It's very simple logic, right? And it's logic, it's not a pattern, it's logic. Here we're on the weekly, right? Watch what happens here. This you need to understand, right? Firstly, this candle takes liquidity, so we already know that this is some kind of manipulation, right? But what we notice is this candle does not close above this candle. Watch. This candle closes above this candle, so we expect higher prices, right? This candle closes above this candle, so we expect higher prices, right? It's that simple. If we fail to close above, we can anticipate, right? We can anticipate some kind of pullback or reversal. Now, this only works at a key level, right, or in a POI. So we have a clear POI, right? We have this liquidity pool which forms the POI. I'll make that green for buy side, make that thicker, right? So we have the POI, we can remove it. We know it's this liquidity pool. This was the first liquidity to be taken. Now, as I've already mentioned in previous in the previous webinar, this is where everybody goes wrong. We sweep the liquidity and everybody goes short. No, wrong. This is not a valid turtle soup. Why? Because the candle opened low. It's that simple. The candle opens low. It's designed to go higher. Why would you put your stop loss above a candle that's designed to go higher? Okay? You don't do it. Right? Because the argument is this was the range before and we failed to close above that range. Right? So therefore, this could be the start of a 3-candle model. The reason we don't take it is because of this. Look. This is why every time you take an SMR and your stop loss gets taken with what I call the second dip, yeah, or the next dig down or the next dig up, this is why. This is why it happens. That's the only reason it happens. Right? You have to wait for confirmation of lower prices. And it doesn't happen here because this candle is at open low. Open low candles are bullish candles designed to go up. Although this one closed inside, we don't know what the next one's going to do. There's no proof, there's no evidence, there's no high probability, right? So there's the explanation for why this is a key level, right? We all know now this.
2 seconds.
Yeah, go on, mate.
Before you move on, yeah. Could you annotate that high again for a moment?
Yes.
Ctrl Z.
Yes, mate.
Because what literally everyone is now thinking, they say, oh, he just randomly picks that high. He just looks at that high and thinks, oh, we reject it off there and therefore it's an important level. Look, if people would literally just take a moment and instead of just simply looking at the candles, move their eyes down and look at the x-axis at time, they would see that that high, yes, was the high of April. And we're now in the month of May.
Yep.
During the month of May, we refer back to the April high and low. That's why that high is so important. And that's exactly what Rich is doing in his subconscious. Time-based liquidity.
It's very simple, guys. You're gonna see.
But the thing,
you're gonna.
The thing
Yeah,
is,
go on.
right? It's
Simple to most.
You know, it's yeah. That's the thing. Like, we're at a level of understanding where we can look down to certain things that people do not understand yet and call them simple. But for the people that do not have that knowledge just yet, it's very hard to comprehend that.
Yeah.
And that's the that's just how it goes. But once people just simply go through it with enough time and patience, all those things will clear up, and then eventually you will realize that it's all very simple, but you just need to see
Yeah.
it. And once you see it and it begins to click, man, you can say for yourself as well, like your model now, it's so simple,
Yeah.
but it's so advanced at the same
Yeah.
time. But you made the advanced knowledge simple to use.
The exact fractal that you've just explained on the monthly, I'm going to explain the exact fractal inside this weekly candle now. So they'll be able to understand exactly what you meant, for sure.
Let's do it.
So, look, guys, this is literally my whole model. This is it. This is it, right? Look at the bodies, right? Everybody knows ICT says the bodies tell the story, the wicks do the damage, right? These bodies closed below this liquidity pool, right? This old high. This is telling me everything I need to know before this candle even comes, right? So look, week 1, right? Week 2, candle 1, candle 2. Candle 2 is the manipulation. Now, you could have taken candle 2 because candle 2 opens high, and we're already anticipating a reversal. We already know there's going to be some kind of reversal or some kind of reaction here, which you'll understand more so in a minute when I go into this candle. I don't want to get too deep with you guys, right? I've already talked too much, right? So this candle opens high and it goes low. So if we like to, we can enter anywhere in this wick. Oh. We could enter anywhere in this wick, right? That's not what I want you guys to do right now until you become full-time profitable. I want you to wait for candle number 3. This is the distribution candle. When you look at all Zeus's, every single one of Zeus's trades recently and past, and every single one of ICT's trades, what do? Do they take the turtle soup? Never. Because they can't? No. Because they're not stupid. Because it's not high probable. And it's not the fastest moving part of the movement. Right? The distribution of any setup, right, is the quickest moving, right, and the most high probable move you can take. That's why ICT takes either the first or second phase distribution or accumulation. That's why Zeus takes the accumulation or reaccumulation or distribution or redistribution. Now, secondly, if I just rewind this one candle, this may not seem clear to some of you, right? I'm not going to go way into detail with this, but it's something that you need to go and look at. This one candle here, right, before this wick came, even now the wick's here, it doesn't matter. Guys, what you need to understand is one big candle one big candle is a low liquidity, is a low resistance liquidity run, or we can look at it as a liquidity void. Now, this may seem very strange compared to what you're normally learning. This may not make total sense at first, but trust me, when you look into this, you're going to be amazed. The bigger the candle, the bigger the movement, the less mess, right? This is not a low liquidity run. Low resistance liquidity run. See how all the candles are overlapping? Right? The sharper the edges, it's not as fast moving, right, as this will be. It's a fact, trust me, right? I already know when this setup's forming because this was a nice big strong stretch candle. I also know that this move down is also going to mirror this exact movement. You'll hear Zeus say all the time, the sell side of the curve mirrors the buy side of the curve. If the buy side moves up fast, the sell side's going to move down just as fast. If it's smaller little slow candles, the sell side's also going to be small, slow, staggered candles. If it's up move fast, it's going to move down fast, right? Now, watch. When we watch this in real time, I call this a double confirmation, by the way. This is super high probability, guys. You need to follow what I'm saying, right? We have a bigger range, right? Here is the bigger range. This is a 3-week range right here. This is the high, this is the low. This is external. If you want to look at it this way, I don't like doing this anymore, but I'm going to explain it because a lot of you look at it that way. This is external. This is the next external. It's not internal, it's external, right? Turtle soups go from external to external. This is going to get confusing. I'm not going to go into that right now. I'll do another video.
Another webinar.
Zeus is already rubbing his hands. Right, Luke. So, because we've rejected the larger range, now we've rejected the smaller range inside that range. This makes this pullback super high probability. I'm talking AA plus, right? AA plus, this move. Trust me. Right, I back tested this, I forward tested. I know exactly what I'm talking about, right? Some of you might say, why this range? Right, it's very simple, right? This is the swing high, this is the swing low. For any of you that struggle with ranges, this is going to kill me for saying this, but all you've got to do, literally, right, is until you learn. I'm not saying keep this on or do it. This is going to go mad. You can use a fractal indicator, right? Fractal indicators will teach you the exact swing points, right? But I have to reiterate, you only use it for learning purposes. You turn it off and you throw it away and you delete it once you understand. Okay? It will show you the low to the left, the low to the right, the high to the left, the high to the right. The fractal will show up above and below the swing points. Then it will teach you how to read ranges. That's the easiest way that I can teach you ranges, is by using fractals. Okay? Only for learning purposes. Now, going back to the point, this is high probable. Why? Because this first candle closed inside the larger range. The second candle, candle number 2, closed inside the larger range, inside the smaller range. Okay? Now, what are we anticipating? We're anticipating a pullback, right, into 50% of the range. This is the whole range, right, but it doesn't mean it's going to pull back to 50% of the whole range, right? We have inner ranges. Don't worry about that for now, right? Super high probability setup, this is all you got to worry about. Now, candle number 3, we're going to anticipate candle number 3 to be the distribution candle. Candle number 3 is always the distribution candle. Always. If the 3 candle model forms. Why get involved here? No point. Get involved in the distribution candle. What will this tell me at this point? This will tell me for the next 5 days, guess what? What's the bias? The bias is bearish for the next 5 days. Wow. No more having to worry about bias, right? We're already anticipating this range low to get taken. Why? Because it's the fractal range of the bigger move, the bigger range, and we already know that we need to come to 50% of the range, thereabouts. If it doesn't, it's because there's another fractal range inside. We'll get to that shortly. I'm going to play the next candle, right, just for, oh yeah, that's it, I forgot it plays 4 quarters. Right, there's the next candle. We can see it play out clearly. This candle, let's neaten things up a little bit. This candle clearly opened high, which is exactly what we were anticipating. Notice how I used the word anticipating, because this is what you need to do. You need to be anticipating moves, right? You don't wait, it's too late, you anticipate. I'm already anticipating this move. Now, funny thing is, what Zeus was just explaining, I'm going to show you a fractal of that. Watch this. Mark out the weekly open. Go to the daily. Right. I'm going to move this over because this was a bank holiday week, so it won't look right, but just hear me out. This says Friday, but it was actually Monday, Tuesday, Wednesday, Thursday, Friday. Right? What do we say? We say Monday, Tuesday, Wednesday, high or low of the week, Thursday, Friday, reversal. Okay? Write that down. Monday, Tuesday, Wednesday, high or low of the week, Thursday, Friday, reversal. It's that simple. And it applies to everything fractally. You'll see the point shortly. Right? So, I already know my next move is, when this week's playing out, is which days have news. Right? Tuesday had news. Where was... I've actually got rid of it. Right, Tuesday was news anyway, 8:30. So, straight away, what's the information I need so far? And it's this. Monday was a bank holiday. Tuesday, we've got red folder news, right? And the news is at 8:30. Right? Guys, listen. I get so frustrated, right, when I hear people in the chats and people asking me and Zeus, when do I know what time to trade? How do I know that it's going to happen then? Guys, this is honestly, this is that simple, right? Look, if we look at the price action, we already know we're anticipating lower prices, right? Now, when I say I'm anticipating lower prices, I'm not doing this. This isn't what I'm doing. The exact thing I'm looking for is this. That's what I'm looking for. I'm not concentrating on the fact that I know I'm bearish. I know I'm bearish, but I need the highest probability entry. And where am I going to find that? I'm going to find that in the opposite direction. This boils down to even your entries, like on the unicorn model. You wait for a pullback into a fair value gap and then you take it long. It's no different. I want to go short. I already know, right? I already know that this is the target right here. I don't want to get in going short. I want to get in going against the trend. I want to go in when price is going long. What day is it going to go long? The day it manipulates. What day is it going to manipulate? It's going to manipulate on Tuesday at 8:30 or just after. It's that simple. Am I sat at my charts at 6 o'clock? No. Am I sat at my charts at 7 o'clock? No. Am I sat at my charts at 7:30? No. I'm sat at my charts at 8 o'clock doing some quick analysis, making sure that I'm correct in my thoughts. Right? What am I looking at on a bigger scale? Right? I'm looking at an open high of the weekly candle. You can see that the weekly open here. I'm looking at this. This is what I'm looking for. Weekly open. I'm waiting for the open retest. That's the weekly candle. Right? Yes, the weekly candle closed high. That's the weekly candle. That's exactly what I'm looking for. This is what I'm anticipating. Tuesday, look what happens. We get the free candle model again. Shock horror. Exactly what Zeus was saying on the monthly. We're anticipating Q2, right? Or the manipulation phase of whichever cycle you're looking at. Weekly, monthly, yearly, daily, right? Three candle model. Strange, no? Where's it going to take? It's going to take the range low because we're bearish. 100%. Not 50%, not 90%, 100%. If we are truly bearish, 100% it's going to take the range low. 100%. Right? This is how it works. Dead simple. So what's happened? I've literally come from a 3 candle pattern or model on a weekly. I've got a week's worth of bias to help me. My highest probability is on the daily when I get another 3 candle model inside that model. Now I'm waiting for the distribution candle. I could have taken the soup, by the way, but that's not what this model's about right now. Not on this candle neither, because it's an open low. Now we're waiting for the open high of this candle, and it's very small. So what I'm going to do, I'm going to mark this candle. I'm going to go down to the 4 hour first. It's not the cleanest, by the way, but I'm not picking these in hindsight. I'm just going from what happened last. That's the start of Tuesday's candle. Okay, we'll go down to the 1 hour. We'll just skip it all and go down to the 1 hour. Now if you look at the reaction from this drawn liquidity. Tuesday was rather nasty, right? Not gonna lie. You could have found options to get in. They're not very clean, right? This is just me being straight with you, so you know. But what I did want to show you was here at 3 o'clock in the morning, for any of you that trade London, we have what's called, it's another 3 candle model, but this is a continuation 3 candle model on the hourly. So we have reversal 3 candle models here, and we have continuations. That's the only 2 that there is, and they're the only ones that you should be interested in, right? The next opportunity came at 12.
Before you continue, Rich, do you mind explaining why those are the only 2 people should be interested in?
Yeah, sure, mate. Because what happens is, again, if we end up pattern trading the 3 candle model, you can find a 3 candle model anywhere. They're everywhere. And the average person will just come to us and say, well, I've seen it all over Twitter, right? All over Twitter, people were just coming up with 3 candle models all through price and saying, what are you on about? They don't work. Nothing works without context. We have to have a reason, right? Trust me, the 3 candle model works. I've been back testing this for months now. I've been trading it live for weeks and weeks and weeks and weeks and months, right? We need context. The context for this is, right, if we don't have price reversing from a key level, it's a continuation, and it's just a distribution phase. Basically, the 3 candle model continuation is literally, right, it's literally the silver bullet of a continuation. It's literally the distribution or second phase distribution phase, or accumulation or second stage accumulation phase, which we'll go into shortly. The next available model is right here, right? Now, if you wanted to counter trend, liquidity gets taken here, and we can go long back into the range 50%. We're not talking about that today. We're talking about only the high probability moves, which is with higher time frame order flow. At 12 o'clock, this was very messy price action, but I'm going to keep it real. This This, in fact, gives us a very difficult price action, right? Very difficult. And as a beginner, it's nothing that I would take. I was going to mark something up, but I'm going to refrain because I don't want to confuse you. I wouldn't take it. So, candle number 3 on this day is a washout, right? Very difficult price action for the average person. I traded it. I'm not going to go into it. I'm trying to keep it simple for you guys, right? The next day, we're still bearish. This is where things get really interesting, right? I'm going to rewind this. In fact, no, I'm not. I'll lose the place, right? If there's no news, we know that 9:30 is going to create the SMR. On this day, there was news, right? But 9:30 created the SMR here before getting taken out later on. Now, Luke, we don't care that this happened. It's irrelevant. The 3 candle model forms again here at a key time, at a key level, right? Luke, we get this double confirmation again. Liquidity gets taken, right? We fail to close above the range candle, candle number 1, and we fail to close above the liquidity level and the range candle, or if you want to look at it as the bigger range and then the smaller range inside. Double confirmation. This is a high probability A class setup. Some of you are going to say, yeah, but Rich, the high got taken. Guys, watch what happens, right? We're looking for the 3rd candle, candle number 3. Let me bring this over. Just want to check. Yeah, we'll go down to the 1 minute. Now, if any of you aren't happy with this move, I'm afraid you need your heads looking at. Because although this wasn't the biggest move of the day, this was the most high probability move of the day. You need to understand that. This move here, although it wasn't the biggest move of the day, this was the biggest move. This was the most high probability. Now, you may be thinking, whatever, Rich, but guys, the evidence is right in front of you. It's right there. And if you can't see, you need to learn how to read price more. In what part of all this price action did price move the fastest, the furthest? Was it up here? Or was it exactly where I preempted the distribution phase to be? And I hope your eyes were drawn to this move right here. Strangely, or not, my high probability A plus setup that I pointed out, strangely, created the biggest move, the fastest move of the whole day. Yes, this is the biggest move overall. In time, this is the biggest move, fastest move there was. This was the most lucrative move.
Quickest.
Sorry, bro.
The quickest.
And strangely, I chose to enter here. And guess what? There's always a unicorn model. Now,
Bringing it back to the beginning of the webinar.
Because it's important, mate. Everybody's trying to catch the turtle soup here, right? It's low probability. Look at all the messy. Yes, it moves down quick. You wouldn't have got out. You'd have been greedy. It would have come back up. Would have messed around. Time distortion while we wait for Dixie to hit the target, or we wait for Nasdaq to hit the target, or we wait for YM to hit the target. Then all of a sudden, bam. Why do you want to sit in all this mess? Why do you want to get all excited? Then you want to get all depressed. Then you want to get all excited. And then your head's going and you want to kick the dog or something because you sat through all this mess here, right? The idea is to get in right here, combined with SMT and the open high of this candle. Look what happens now. The point that everybody's missing on everything that ICT's been saying and all this hype of the 3 candle models and candles of ranges and all this stuff, right? The difference is, guys, the educators can't tell you what me and Zeus can tell you. Trust me. I don't care what anyone says. We're above and beyond the average, well, more than the average people. And that's not me being arrogant. I truly think that. Me and Zeus have conversations that are just on another level, and I struggle now to even find people to have conversations with.
But that's the thing, bro. Like, you get to a level that the circle just gets smaller and smaller.
Guys, Luke. What time's this candle? Candle number 1. 8 o'clock. What time's the manipulation candle? What time do we expect the manipulation? Other than the next news time. 9:30. This is the 9 o'clock candle. What's the distribution candle? 10 o'clock. Think. 8, 9, 10. 8 o'clock, 9 o'clock manipulation, 10 o'clock distribution. What has ICT been banging on about the whole of 2023?
Begins with silver.
What is ICT's actual model? What did ICT say out of all the models? If he had to choose one model for life, what would that model be? It would be the silver bullet. Right? Some of you at the moment are having a light bulb moment, and some of you are still bewildered. Right? And I'm going to show you. Look, I'm going to zoom right in. Accumulation, manipulation, distribution, high probability reversal, at least back into the range, if not taking out the last low. Right? What everybody, and I mean everybody, I don't care, listen, if you've heard this out there, this has come from me. I don't care who said it. Right, this come from me and Zeus. Me and Zeus knew about this ages ago. Right, we've had conversations about this months and months ago. This wick right here is the silver bullet. This is the distribution. This is why ICT, if you notice when ICT does a silver bullet trade, right, he doesn't just turn up on any old day. He'll turn up an hour before and he'll say, right, I'm going to trade a silver bullet. Somehow he knows the ultimate times and days to trade a silver bullet. When he knows the high probability, this is how. This is exactly how. If you use a little bit of logic, 8 o'clock creeps up, doesn't quite take the liquidity. Right? I already know, guys, listen, this is how you have to think. I already know 9:30 is going to purge the high, and then I need to come back and check that the 9 o'clock candle closed back inside the range of the range candle. If it did, I know I'm trading at 10 o'clock, and I already knew at 8 o'clock. 7 o'clock, I could come and check the charts, nothing happening. Go away. Come back at 8 o'clock, what happened? 8 o'clock still didn't reach. Okay, sweet. So now I know. 10 o'clock, I already know at 8 o'clock that 10 o'clock I'm going to be trading. What do you mean? Well, it's obvious. 8 o'clock did not take the liquidity, so that means 9 o'clock has to take the liquidity. Or 10 o'clock or 11 o'clock, depending on which way it's going to go. But I'm already anticipating this exact thing to happen. I'm anticipating 9:30 to take the liquidity, and I don't care, I'm going to leave it alone, and I'm going to come back at 10 to 10, and I'm going to wait. What does ICT say? ICT says, watch, and this isn't cherry picked, I'll go to another example in a minute. ICT says go to the 5 minute and take the first 5 minute fair value gap. Let's test that theory.